Chapter 5 is about deductions that you're allowed to take on your tax return for business expenses. A lot of this chapter is just it's understandable reading. The deductibility rule for expenses is pretty. It starts off very basic. You have this initial situation that the textbook provides. But then in 5.1 here, learning objective 1, the basic rule for deductions to be deductible, or expenses to be deductible, is the section 162 statement that says all ordinary and necessary expenses incurred with carrying on a trade or business are deductible. That's the general rule. So if you have business-related costs, and if they're ordinary and if they're necessary, according to the whatever management believes, then they're going to be deductible expenses. There are lots of exceptions, and the textbook goes on to cover many of those exceptions. There's also a reasonableness requirement to deductibility too. Expenses that are deemed unreasonable in the circumstances will be disallowed by the government. And I'm just going to scroll through quickly here. Look at some of these vignettes as you peruse the chapters. Learning objective 2, timing. This gets back to the idea of cash versus accrual accounting. We've covered these topics before in different accounting classes and in chapter 4. If you use a cash method of accounting, expenses are deductible when they're paid, and accrual method of accounting has deductibility governed by when an expense is incurred, the period that it relates to. There are these all events and economic performance tests that help determine when a cost is deductible. Look at this example here, number 6, having to do with this recurring item exception, also that allows a cost to be deducted in certain accrual situations. Have a look right here, example 6, and also example 7. Let's see what's next. Some disallowance possibilities. Learning objective 3 gets at a bunch of specific types of costs that are simply not deductible. Public policy limitations. These are, when you break the law and you have to pay money, fines, bribes, stuff like that. Those costs are not deductible. Legal expenses incurred defending yourself when you get in trouble for doing something wrong. Those can be deductible if it relates to a business activity. Expenses related to illegal businesses, you would expect something like this. Fines, bribes, kickbacks, all these kind of things are not deductible. However, it is interesting to note that, let's see, where is it? If you're a drug dealer right here, trafficking drugs, you do get to deduct cost of goods sold on your tax return. So it's not. You might find it kind of funny that income from illegal activities are taxable, but they are taxable, and cost of goods sold is deductible in arriving at that taxable profit, taxable income. Political contribution, lobbying, these costs are non-deductible. Excessive compensation. You might be surprised to find out that the CEO and the top 4 other highest paid executives of a company have compensation deductions limited to $1 million annually. It's not that they can't get paid more than that, it's just only $1 million per person is deductible. Capital expenditures, okay, kind of read through more stuff. Investigating a business, when you're looking at expanding your business and you incur costs to do so, are those deductible? You can read this section to learn about that. Transaction between related parties are also limited. You can't simply deduct losses that you incur when you sell property to a family member or a friend or something. The government's going to disallow those losses because it's not going to call it arm's length. So you can look at those rules some more. Just some reading, and I think expenses related to exempt income, non-deductible as well. That's like if you borrow money to then go buy tax-exempt investments. I'll pick this up in the next video.